Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Tuesday the 5th of January 2021. We've just gone 5:05, 0500 in the morning, GMT, London time. Asian session coming to a close, European session firing up. Our lunchtime is the start of the US North American session. So I've written this up to save a little bit of time. Right, so yesterday then, Monday, these were the bracketed flows. We had tremendous pound weakness after a while. The pound was operating as the negative unopposed driver at minus 227. Basically we had no backdoor flows because it wasn't opposed by anything. So all these flows, and if you notice, the euro just about won out on the positive opposing flows, but they were very even. So the pound was being sold off, and the flows were going very evenly into the dollar, yen and euro complexes, with the euro just slightly ahead as a positive secondary driver, and that was on activity of plus or minus 227. Now we'll talk about it in a minute, but let's just get cracking. Intra-week then, so this is from Monday opening, so this is what's been happening throughout the week, and we've got the very similar picture here. We've got the unopposed negative driver in the pound, excuse me again, and all these front door flows are going into primarily the euro here, to a lesser extent the yen, and the hardly at all into the dollar. So, and that was on activity of plus or minus 212 so far this week. Now finally, the most up-to-date flows, which are the intraday flows for today, which is Tuesday the 5th. We've got a different picture emerging. So far today we've got the dollar complex being the negative opposed driver at minus 44. The yen is pretty much static at minus 1 as a negative rock, and so we've got front and back door flows, positive flows coming the other way, going fairly equally into the euro and the pound, and that was on activity of plus or minus 45. Now for some context, if you remember last week, we had the pound was the unopposed positive driver, so it was the exact reverse of that. And yesterday in the briefing we suggested that means one of two things. It means either a continuation in the pound complex going on the up, or a pound top. Now we sort of came down on the side of a continuation, and initially that's what we got in the early morning flows, and then all this situation completely changed round and it reverted to, so the pound became a top, and that was off the back of information we were unaware at the time, and the UK was going to go into the third full lockdown, and last night we had that confirmation from the Prime Minister. So that sort of explains what went on there. So then, given that backdrop of lockdown, and the way the pound complex was positioned as the positive unopposed driver, it was a no-brainer really to for the market to sell off the pound heavily, and there you go. Now we also suggested that the something to look at was the euro yen. This was very tightly range bound, relatively tightly range bound, and we actually were expecting it to bounce, which it did do. It bounced, and we sold into this bounce, and we now have a sort of a, well, if you want to call it a swing trade, short euro yen swing trade, 20% short in the euro yen, and basically thereafter we believe that thereafter the stops that are around 125, let's have a look, where did we say, 859. I mean, this is roughly, but that's where, and this is a multi touch long-term support, which we believe will be toast shortly, and that is one of the reasons, apart from the flow data, why we have gone 20% short the euro yen. We had to fight the market on the way up a little bit. We're about 40 points behind on 3 trades, so we've got 3 positions, and that's where we are. So let's tidy this up. Let's talk about today. Right, so we've got this unopposed negative driver in the pounds yesterday, off the back of this lockdown and the pound positioning. We've got this unopposed throughout the week, but today so far the pound has shown a little bit of resilience. It's the positive mover. So the flows, that they haven't hammered the pound down quite at all today so far, and the dollar is showing reverted back to slight dollar weakness. Remember what's happening. We've got Tuesday. Yesterday was basically a zero data day of any significance, and today we've got German. What is it? German retail sales, US PMI. Tomorrow we've got German CPI, and we've got the Fed minutes tomorrow. So this is the sort of backdrop. Beyond that, what have we got? Thursday we've got Euro retail sales and US service PMI. Friday is NFP. So and CAD tier 1. So we've got sort of a focus, if you like, of euro data and US data coming out. That's our sort of data cycle window, and we've got this positioning of the pound. We've just had the lockdown. Equities came off yesterday, and we've just seen a little bit of news about them not going to delist certain Chinese companies, which could be positive for the equity market. But we're still hanging in there on the short euro yen. So it looks to us like the euro yen is in play to the downside. So that's where we're sticking our positions at the moment. There's going to be tremendous manoeuvring coming into the minutes, and with the non-farm payrolls behind it, and beyond that, the following week you've got basically US data, punching through then. So the dollar's going to be very significant in a way. So and the dollar has been pounded off. So yesterday, despite this major sell-off in the pound, effectively, the dollar was struggling to gain any traction through the week. Yesterday it was on an equal footing, and it's starting to come off again. Now gold has come off. Gold has said gold is very wary of a stronger dollar, so there's a pause there, and there's a pause in equities. So we believe that from the overall data and the overall positioning is that the market is gonna punch the euro yen down through these a bucket full of stops that are around 12585 and change, and so we're short euro yen, and that's our situation. So I hope that was helpful for you today. See you tomorrow. Thank you.